What is up, everybody? How is everybody doing today? Hopefully well. It is Thursday, May 6th, and I'm back to working now. I'd taken the previous 2 days off, so just squeezing in, a couple trades in the morning, and then whatever I can manage to do from work. We're back to that, so definitely less trades taken today, but I still had a really solidly green day today that I was very happy about. Let's see. The first one was on Alf this morning because it ran in the pre-market. It was a pre-market play. Let's take a look at exactly what time and what price. Okay. So, oops. I just opened up something on accident, I think, yeah. Okay, so at 7:34, I said, I'm just going to watch a zone. So right here, this candle. So right in this zone, I said 542 to 5.3. You can see that these zones are based off of these wicks over here on the 10, or on the, more or less the same on the 5. But I generally will start on the 10. If there's not any key levels that make sense, I will then come over to the 5. But just real quick, let me explain kind of why I use this as my zones, and why sometimes I choose some wicks as opposed to others, yada yada yada. The first thing you need to know is like what makes up a candle, right? Like what is a candle as a vehicle of information? What does it tell us? And what it tells us is that this candle, first let me explain what a candle is for anybody, I don't want to, sound like I'm belittling or anything. Some people generally, don't know exactly the mechanism. So let me take a second to explain that. When a candle opens, it will start with a bar, right? And then that bar will either go below where it opened at, it'll be the body, and it'll be red if it's below, and so essentially this candle opened here, right? And then it went all the way up here. It actually at one point went up here, which is why this wick is here. A wick signifies that it was an area where price was before it got pushed back down, and then it eventually closed here at this $5 mark, right? So this wick is a good indication of price was going, right? For 10 minutes, it was going up, 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 up. It saw this price level right here, this 542, and it said, skirt, and it stopped, right? And it went right back down to whatever before it closed. Well, that tells me that at some point during this rally, people who were buying and people who were selling, met at ends with each other right here, and it started pushing back the other way. So in their psychological aspects, in their little minds, at that point in time, this was the point of it's not going any further. This is where buyers were no longer willing to purchase it at a price, and sellers were more interested in selling it at a price, which is why it came back down to where buyers were willing to step back in. So that psychology as an idea is why I like to use these wicks, because at one point in time, the top of this wick was a significant area where buyers and sellers, came to ends with each other and pushed price, one way or another. This is the deciding point where price was decided, and it was decided to go back down. Now up here, it was the same situation, right? It's the exact same story. So this one actually opened up here and closed down here. But at one point it ran all the way up to here before people were like, okay, I'm not willing to buy it anymore. People were only willing to sell, and it ended up closing down here. So that is why I use wicks. I know that some people think that I have some kind of like mysterious method of like some wicks are better than others and stuff like that, but generally outside of wicks, first, like in the pre-market, we were only looking at like this much information at the time, right? So I didn't I didn't have a whole lot to base it off of. Imagine if we just saw this. This is what we saw here, right? I was looking at this at the time. These were all that was available on my charts, right? So I said, okay, well, I don't want to make my zone down here, right? Because if I choose, this body and this body, and sure, those might be some significant levels, but if that trend comes all the way down here, I might be less interested in taking it without seeing, where the kind of the rest and push and pull ends up being in between there. Like if it just goes up here and comes straight down to here, that's not a very attractive move. So I didn't have a whole lot of options here, and that was my thought process on why I would have preferred to have watched this area first. And eventually it did come down, and it filled me right here at 532 exactly. Oh wait, I might be wrong. 5.3. So I'm sorry, I was off by 2 cents. It came down here and filled me. And I actually took profit right up here at, I actually took it at 5.5. Scaled out right above 5.5. I think I ended up getting filled at like 5.57, 5.58, something like that. But the reason for that is you guys, wow, that's such a tiny zone, right? Or that's such a tiny range. Well, in pre-market and after hours, I don't really do after hours. So specifically pre-market, which is I'm way more likely to take a trade in pre-market than after hours. What I do is I typically will, if I'm going to do my bid ladder, my descending bids, I will do real light up here. Like let's assume I'm going to take a max position of 1,000 shares. I'll do like, maybe 100 up here. And then like maybe one more of another 100. And then like 800 at the bottom, right? I want my cost basis in the pre-market to be as close to the bottom of my zone as possible. Because that way, I don't have to make significant moves. If I just pop out of my zone, I'm in the money, $100 or whatever, right? At least close to it. And that's a trade worth my time at that point. So in order to make these tiny moves worth it, while also maintaining a very, very low downside risk, my downside risk was actually right down here. So we're talking about a 15 cents stop. Price action would have had to go below these highs, or these wicks, which, as we just, our little lesson there, we established, why I believe wicks and bodies of previous high time frame candles are important. It would have had to crash through that, through this action here. It would have had to go through that, VWAP and the 20 in order to stop me out. If all those things collectively go wrong, then yeah, I don't want to be in the position. Now, I actually said in chat, I'm scaling out entirely. It's pre-market. Now, what is that? Why does that matter to me? Well, the reason that it matters to me is because pre-market sucks. So I didn't have any better way to say it. Pre-market sucks, dude. I can't stand it. It's because the volume is so deplorable. It's so low that if people panic and you like everything is a rug pull. Like when stuff comes down, it comes down. And then it fights to go up, and then it comes down. So it's just, it's super dicey, right? I like to keep you can't have active stops, like market order stops. You have to just have mental stops, which is something that I can't stand mental stops. I'm very, very hard stop centric. And, so just those things make me a little bit more uneasy than I usually would be. Now, I'm interested in taking this trade because I like this action. You remember I called it way up here, and it came down and filled me perfectly. So I thought, okay, great. The continued upside to this, possible rally to 5. To 6. Possible rally to 5.89. I mean, we got some major levels like 1, 2, 3 different profit targets of a really decent range. But as soon as I saw this, and it failed to get over that 5.5 area with confidence, and it just kind of peaked up over it before coming back down, I said, yeah, this isn't. I wanted it to work immediately. In the pre-market, I don't have the patience nor the risk appetite to be like, well, let's just see. Whereas, if I've got a, an idea or a plan on a ticker with millions of volume in the middle of the day, it's very different. But in pre-market, I'm taking my quick, easy gains. I'm not holding it. I ended up making like $100 on this trade. But the difference between starting your day off with $100 in your pocket, as opposed to negative 100 or whatever it does a lot for your mental, right? It does a lot for your mental. Sometimes I'll come into pre-market and I'll trade 100 shares and I'll make $8 and I'll be like, yep, we up on the day, feeling good. Just wanted to make sure that my idea was working. It wasn't something that completely shit on my zones. My system, had some respect. The zones I identified worked, not super well, but they did. Like, all those things go into whether I like it to subconsciously or not, or whether I like it to or not. It does subconsciously tell me, okay, yeah, no, I got this today. I can do this. And sometimes you just need those affirmations to tell you, like, yeah, you know what you're doing. You know what you're doing. You can do this, right? And the dollars the dollar sign attributed to that is really meaningless. The W, and I think the confidence going forward, I think means a great deal more than whatever the actual gains might be. But we're getting a little bit into the psychological aspect of things. We'll just continue what we're doing. So yeah, I ended up taking that small gains. Now, somebody actually did message me at one point. Let me see. Okay. I don't want to dox this person, so maybe here, this is what I'll do. I don't want to expose anybody's DMs to me, so I'm going to just do a little crop right here. Show you this. Okay, so I said, someone messaged me and said, how did you identify your zones? So I sent basically just what I explained to you guys. I thought it was in decent trends, based my zones off of yada yada yada. I pointed out the wicks of the levels. Stocks always seem to have a healthy pullback to maintain decent trend, so I was banking on a pullback. This is after I had already taken profit. This is the 10-minute chart. Obviously, it wasn't as good for a little tiny scalp look as the 2 was at this point in time. But I said right here, this is what's important. I said, so 483, to 5 to 483 is the next ALF area I would watch if it continues to come down. Now, if we look at this real close, it was at like 520 or something like that at the time. I don't know. It was, that would have been, it would have been on the 5. So it was at about 540. It was about 540 at the time. And I said my zone would be 5 to 483. 483 based off of this body, this body, this body. 5 based off of the whole dollar, as well as this body right here. Remember when we talked about earlier, it ended up closing at 5. So I assessed the zone based on that. Now, I actually think that, like, if I can manage to make a zone that touches multiple points of confluence on these high time frame candles, I believe even more in that zone, because that tells me that it was, just like we explained earlier, the impact of price. It was the impact of price multiple times, right? Which makes it, every time that it's impactful level throughout the day, it makes it more likely that it will be impactful in the future. If price bounces off of $5 100 times in a day, the 101st time, I'm going to be pretty likely to believe it's going to happen again. Obviously, that's a rash over exaggeration, but the point remains. So eventually, about 40 minutes later or so, that was at 750. So yeah, about 30 to 40 minutes later, price did come down. It wicked, and now I actually wasn't in the trade. I just was given an example of how I formulated it, and it popped right up to VWAP. If I was in the trade, I would have risked probably, that's hard to say at this point. I didn't come up with a plan because I was like showering and doing other shit. I guess a good key level would have been right here. I should have risked this bottom wick, because if it caved through that, I know that the next stop is down here, and that's just a little too much loss. So you could have had essentially a 7 or 8 cent stop, 10 cent stop, it looks like, with a potential 40 cent upside. So the guy that I was messaging did end up taking that trade, I believe. Maybe not. I can't remember exactly. But just a good example of, how I identified that zone way over here. Whether or not I was going to trade it was irrelevant at that time, and it did come down, and it did react to those levels. So two out of two times, these wicks that I based price off of ended up being significant later on. And that's pretty much the theory in a nutshell. So hopefully that clarifies a little bit more. I get a lot of questions about how I do my zones, and I think it's actually more simple than a lot of people give me credit for. So yeah, that was it for ALF on the day. Let me try. NMRD. Okay, this is actually one I didn't take because, as you guys know, I've explained over the past few days that it is pop and drop city. The market is super run up, run down. And I hate that. I hate it so much. It's not good for my method, right? I actually thought about this earlier today. Let me explain this in a way that's, Pokemon was a big thing during my generation, so I apologize if, this analogy or comparison or what have you is lost on some of you. But so I like to think of my trend strategy as like a grass type Pokemon, right? My trend strategy or trend strategies in general are like a grass type, right? Well, they're weak to fire types, which I would consider pop and drop markets. So just for myself to process information in the stock market and learning and education and terminology and all that stuff, I like to associate it with things I'm familiar with, things that my brain can easily make connections with. And for me, video gaming is a big one. I've, done competitive gaming for a lot of years. I, stream stuff on Twitch, yada, yada, yada. So anytime I can relate things in like a gaming sense or treat things like a video game, it helps me to have a better understanding because I'm just a little bit more predisposed to that kind of stuff, right? So let's assume that you're playing Pokemon and you know for sure, based on a week of battling a friend of yours, that all he does is throw out fire Pokemon. Well, are you going to keep throwing out grass Pokemon knowing that, you're weak to it and your chances of winning are, pretty damn slim? Or are you going to adjust and be like, well, let me wait. Let me make sure he's throwing out a fire Pokemon. And if he does, I'm going to choose not to battle him, right? Now, I know that's a silly comparison, but that's kind of how I feel about the market right now, right? So my trend, my strategy, my Pokemon, the weakness to it is fire, is pop and drops. So when I saw this today, I said, how many times am I going to throw a grass Pokemon into a fire battle and be upset with the results? Now, you can obviously change that analogy or comparison or to anything you'd like that helps it best relate to you, right? Because the biggest thing about learning and educating yourself when it comes to the market is putting it into terminology that can help you process the information. By explaining things to yourself or having things explained to you in a way that you can better understand makes it so much easier to latch on to and soak up that information. So that analogy is silly, the Pokemon one, you guys use whatever. The point is that if you know you have worse odds in a certain situation, just avoid the situation, right? So now that I've explained that, I can kind of talk about NMRD. So like I've been doing lately, I came back 15 minutes after the open, and I said NMRD 1374 to 14, no bids yet because the 10-minute chart isn't looking great. I just want to watch. 1374, 846. So we were in this 2-minute candle right here when I said this. We're right here. And I said 1374 to 14. Ooh, let's see if I can, yeah. And those levels were based off of whole dollar, which is a psych level. You can see that it had multiple touches on wicks and stuff over here. And 1374, which was the high of this candle right here, 1375. So yeah, I was close. I just eyeball it. So that cent and when it comes to a range this big isn't that big a deal. But anyways, price came down in my zone, right? and it wicked down right here, and it popped back up. And I said, well, I didn't have descending bids, just like I mentioned. And I ended up saying, this is a perfect zone fill. However, I'm watching to know that this bottom will hold. So it came back into my zone, and what did it do? It crashed. And I said, I believe the next thing I said was, haha, won't trick me today, suckers. Because I realized that here I go. I could potentially be throwing a grass Pokemon into a fire Pokemon matchup, and my chances of winning that are slim to none. So why don't I wait a second to truly assess the situation? Maybe I get a worse entry, if it does hold or go up. Maybe I get no entry at all. So be it. Those are both better situations than being a part of this entry and being a part of this exit. Because by the time you're entered in this situation, I mean, this is a huge candle, dude. This is a whole dollar. This opened at 416 and closed at 1416 and closed at 1314. Came all the way down to 12.8 and sold off all day. So I was very proud of myself for, potentially having this one significant loss, frustrate me on the day. I was doing some serious thinking, and, based on my reviews the past few days and the assessments that I've been able to make from that, I knew today going forward that, this will be a stock that, based on the action, I should wait and see what happens. And it paid. I ended up taking no losers today. This would have been a big one. This would have wiped out probably a lot of my gains, because by the time you get market filled on a drop this big, I mean, you're getting out like down here or something, maybe even all the way down here. Depending on your position size. I mean, you could position size for a 10-cent loss and be like, okay, I'm going to take 1,000 shares. But then by the time this hits you and it does trigger your loss and you get out down here, you lost $1,000, dude. That's crushing. That's gouging. So anyways, this was the 10-minute candle I was seeing when I said it doesn't look great. Had it come up here, brilliant, right? But the fact that it popped up over these pre-market highs and then closed back under them, I was like, oh, that doesn't show good strength. That when things pop over significant levels, you like to see, boom, them go, because everybody's like, all right, jump on the ship, we're gonna miss it. But when it just pops over and then comes right back down, that tells me that there's not a whole lot of people interested in riding this one out. And so it sucks, because that at 14 there was a huge profit potential of $2 move or so, but I decided to wait, and I'm very happy. The next ticker I took is MITO, another pop and dropper. I took it for very small scalps. I don't know if anybody in chat saw that I have decided, based on the past few reviews I've done, that today that I'm going to go back into self-preservation, real tight scalp mode, and that's about it. Maybe even implementing some knife catching strategies. We'll see, because you can see knife catching right now is almost lucrative in some situations. I just have to kind of come up with my own system that allows me to mitigate risk and do something like that. So I'll have to give that some thought. Anyways, MITO, I said at, let's see, I can't remember what this one was. So at 847, so right here in this big old candle, right up here, because it closed at 848. So I said 1219 to 1212, 1219 to 1212. So boom, it comes down. I actually did have descending bids, so it ended up filling me in full. I saw some of this action come out, get bought up, come out, get bought up, and I looked over here to the 5, and I saw that the 5 was basing on the 20. This candle, every time that the dips got bought up, gave me a bullish little pin bar-esque look to it, and I said, you know what, I think this has continued action. It's also important to keep in mind that LEDS was running And this is a sympathy to it. It's in the same sector. So I said, okay, I have more confidence that this is going to go up than I do that it's going to go down. So I continued to add. I think my cost basis ended up being 2-1 as a whole. But my stop loss is down here at 2. You know, because sure, it might bounce off of 2. If it came down to 2, it might have bounced, right? It might have used 2, the whole dollar, as a support. But at this point, I'm already 12 cents out of the money. I'm going to see a 12-cent recovery to break even. Like, I'm not interested in all that. I'll reassess, get a better entry on the move up if I think that's what is necessary. So anyways, 2 is my stop loss. I got a position down here to 2-1. It came up here to 2-3. Now in chat, I said, okay, I'm taking half profit at 2-3, and I'm adding back on the dip. It dipped. I got in at 2-2-4. I could have gotten in a couple more cents, but it's okay. 2-2-4. I added back the half that I had sold at this profit target of 2-3. And this is what I call the free play. If you're not familiar, you've probably heard me talk about it. I have a video on that as well. You can find it in the little playlist or what have you. Anyways, I took a half profit here. So I'm out. I think I did it 1,000 shares. Or let's just assume it was 1,000 shares on this trade. I've taken out 500 shares at that 20-cent move. Beautiful. Comes down here to 224. I fill 500 again. Back to 1,000 shares. My cost average goes from down here, which again, I stress this in the free play video, that a really good entry is important, because when you sell and then re-add, it raises your cost average. So my cost average ended up being close up to here. So I end up setting my stop to break even. So that worst case scenario, the only thing that can happen here is I make half profit on the trade, 20 cents. That's what, $100 on 500 shares, hypothetically. I can't remember what my size was, but let's just say that that's what it was. So I make $100, no questions asked. If I get stopped out, I get stopped out for 0. But it came right back up to 2-3. I sold the other half. So now I've taken an entire trade's worth of profit, 1,000 shares at 20 cents. So I made $200, give or take. And I still have 500 shares. I move my stop up to break even, and it goes up to 2.4, and I sell. And boom, for free, with 0 downside risk, I got an extra half a position to go an extra 10 cents, which is $50 on 500 shares. So, $250 trade where, I for 150 of that profit, I risk $0. I risk literally nothing. The worst case scenario is that I made $100. That's the worst thing that can happen in that situation. So I liked that this dip was being bought. It had a lot to do with the 5. Again, very bullish. Had a lot to do with LEDS running at the same time. So I felt all those things told me that, yeah, if I can squeeze a free play out of this one, I will, especially considering my entry is really solid. I took that trade right there. Had somebody even message me on Discord and say, dude, I took that free play with you. That's my first free play, or that's my second or third free play. Thanks so much, blah, blah, blah. And that makes me super happy, right? I love to hear that, because the free play and understanding like when it's good and when it's bad and the speed at which you have to do it is, it's challenging, and it's a judgment call, kind of on the fly. So to hear other people are picking it up and implementing it and adding it to their playbook or what have you, that's really cool. That's really cool. That means a great deal to me. So I thank you guys for all those messages. I really do enjoy them. So then that was it. I had to go to work, right? I ended up taking 2 more trades on the day. I'm sorry, 3 more trades on the day at on my mom's Webull account, because that's what I was logged into on my phone. I was doing some trades for her, and I was like, yo, I'm about to make you some money. She's like, whatever. So LEDS, which I'm sure that if you traded all day today, you probably saw. Again, keep in mind that I had already at work browsed the runners on the day and assessed that, it's pop and drop again. It's fire Pokemon battling day, and my grass Pokemon are not really interested. So what's the best thing to do? Trade with someone else's money, obviously. No, but So the best thing to do was to adjust my strategy and understand that, drops, knives, they do consolidate at key levels. So, identify that and set your stop loss accordingly. Risk very little, but, have potential upside if volume is staying there, yada, yada, yada. So at 11:41, I was on break. So it would have been right here. So right in this action here, I said, I like 1066 to 1036. 1066 to 1036. And I ended up getting filled on my top bid. And then boom, it skyrocketed, right? And I sold like at high of the run, 11.6. So I ended up making like $70 off of 100 shares that I got filled right there, which was dope. Then it came down, and it filled me 100 shares again because I reset up my zone, seeing that price was capitulating. It was trading sideways really tight like this. And what happens when it trades tight? Trades tight, drops. Trades tight, drops. So I got filled right here. And then I sold at the as soon as it came up here to 11.5. I actually got filled at like 11.4 or something like that. But I sold at market because I was on my phone. But another good trade. And I said, I'm going to keep beating this dead horse. I'm going to stop beating this dead horse when it stops spitting out money. Right? I mean, it's okay to be a one-trick pony. It's okay to do one thing really well. Because as long as it's paying you, then like who gives a crap, right? I think that's important. I think that some people are too concerned that like I need to be this kind of trader and I need to be, dude, I have absolutely zero shame in the way I am. Never have, never will. Anyways, so I then said, and a lot of people were kicking because they thought I was some kind of clairvoyant. I said right here, at 12:16, so at this candle right here, let's look at the 1 minute so you can get a better idea. At 12:16, which is this candle right here, I said LEDS is about to break to the downside. It's going to fill my zone. We're going to ride into the sunset. Watch. And it said, in the very next candle, it said, and everybody was obviously so impressed at my clairvoyant abilities. But I'll be real with you. What I saw was what I just explained. You come over here, you see, especially on the 10, right? Sideways trading, drop. Sideways trading, drop. Sideways trading, drop. That's what everything's done the past week. So when I saw this real tight action with these, like anytime that it popped, it was pushed right back down. I say, well, that's not a good sign. If it does happen to get over that 12, it could really go. It could squeeze. But what have I seen happen more often than not the past few days? I've seen the drops be the more prominent, event that takes place. So it dropped, right? And I said, I'm taking ads 9.8 down to 9.55. And I did. So as soon as this wicked up, I bought right in this range. Everybody called me crazy. I posted my screenshot in Discord. It was on my mom's account. I bought right here. Or maybe I bought over here. I can't remember exactly the time. But I held through all this shit. My stop was like right below this. Because I said if it breaks this low, it's no longer a higher low. And, it has potential significant downside, right? That's all you got to do is look over here on the chart, see what it was doing earlier in the day. Yeah, this low right here, I don't want to be a part in anything that takes place below that. Because that's a forfeiture of my plan. So maybe I bought down here. I can't remember. Regardless. Actually, you know what? I think I ended up doing descending bids. It popped up here, came down to fill. I said, dope. My average actually was not very as good as I had hoped. I just must have done my ladder poorly being on mobile. But I ended up with a 9.7 cost average, and I was like, oh shit, because it went against me, and I was staring at I was staring at like a like a couple $100 loss at this point, and I was like, well, it's still, even short term, isn't going lower than this candle. As long as it doesn't go through that, I feel pretty good that it won't go to that. So I watched it. I held. Obviously, I already had my stop in play. So, like, worst case scenario, I get stopped out for the risks that I already have come to terms with accepting. And what does it do? It booms. So what do? I took half profit right here at 12.5, or I'm sorry, at 10.5 at the pop over VWAP. I raised my stop to break even, which was all the way down here at 9.7. Because yeah, at this point, if price comes down, and keep in mind I'm doing this on my phone, so it was very hard for me to type in Discord. If you're wondering, like, where was the play-by-play? I'm sorry, I wasn't able to really provide it as much. Because so I took half profit here. No shame in the game. I think I was in 500 shares. I made like a couple $100 or something. I took half profit. I was in 250 shares left. I raised my stop to break even because, yeah, if it comes all the way back down here, I'm not risking money on it's going to come all the way back up. Now, it's failed at that point, right? Like, I'm totally cool with accepting that's failed. So I raised my stop to break even, lock in my profits, risk nothing. And then what does it do? It pops. And then it pops. And right at about this time, my mom texted me. Yeah, I said, watch, I'm adding this down to 955 on LEDS. My mom's about to be rich. And then, here, I'm going to bring up the Discord so you can see. I said, my mom's about to be rich. And then everybody called me a clown. Everybody gave me sad pepes, dog shit, all that good stuff. They laughed at my ads. And then as soon as it knifed even harder, I was like, oh, God, I'm sorry, Mama. I thought that was pretty funny. Apparently, so did some others. And then I said, well, look at that. I'm in the money. Hashtag scalp God. What the fuck? That's what I thought, dude. That's Rodessa. Whatever. Anyways, scalp God, Mama eating tonight. Yeah, here's proof. I was in 500 shares. I told you my cost average was 9.7. Pretty shit. And then I'm up here in this move, and my mom, because my mom's got Webull on her phone, right? And anytime that I adjust, so as I was moving my stop up to kind of manually create a trailing stop and take half profit and stuff, she was getting the notifications that said, like, your order has been filled on blah, blah, blah. So her ass texts me. She texts me at right around here at 11:20-ish, 11:30, sell that shit. And I said, bruh. So I ended up selling it. It popped right above 11.5, and I did a market sell. So I don't know what I got filled at. I saw that 1160s were on the level 2 at the time. But I don't actually know when I got filled. I said, pleasure doing business. And then it went up, obviously, to 12. And then it consolidated, went up to 13. And I said, man, you cost us. I said, I'm the captain now. Had to let her know. But, man, it was hella funny, dude. I was cracking up and just having a good time with it. I did say y'all fucking laugh emoji'd my 9.5 ads, SMH, Sometimes you gotta feel yourself a little bit. That was a crazy move that maybe was stupid, but it paid. So in the future I will mitigate risk a little further. I think that I definitely could have executed this whole system a little bit better based on these higher lows. I could have seen that this was lower, and I could have added in this range and gotten like a 9.2 all the way up to 9.5 range, maybe a 9.3 average. Could have squeezed out, $1.70, $2, something crazy. I wasn't really, as well organized as I could have been, being that I was on mobile in the middle of a children's casino. So that is it for the day. One second, somebody asked me, man, I'm so bad about this because I get so many DMs every day. Somebody said, somebody asked me a question to go over in the video, and I'm trying to remember who it was. Oh, okay, here we go. Could you go into a little bit more in depth and how you choose the range sometime? Okay, so hopefully I did that at the beginning of the review here. But I guess we can use this as an example for, let's say that, well, first of all, look at this. 946 based off of this wick here, which, remember, just like I explained previously, how price is directly impacted by, and then you could have put the whole dollar, right? You could have taken this wick to the whole dollar. You could have potentially even taken whole dollar down to this wick. For a real wide range, you can take this to there, this to there. Sorry, dude, the Texas came out. That was crazy. And look at these sweet dip ads, right? So it's just important to understand that, wicks and bodies of previous price action, those are where people, had a direct impact with whatever that level was that the ticker was trading at the time. That's really what candles are as a information vector. So anyways, let's assume that this was the trade I was in, right? Why do I want my stop to be down here or right here? Because, like I explained earlier, this level, which I think is a significant level based on my explanation at the beginning of the review. So if this caves and it comes down to here, well, I would like to consider myself that this idea that I had is wrong, because it obviously fell through where I expected it to hold. So I'm okay with accepting my loss. It's very well defined down here, and there's not a whole lot of wick adjustments. And I take my position size based on the distance of my, my zone to my stop loss. And that's how I, adjust my position size. I risk 1 to 2% of my account per trade, depending on, right now I'm only risking 1% because the market is the way it is. And when things are a little hotter, I'll risk 2%. But let's say I want to risk $100 per trade, and that's my max based on 1% of my account. That would mean I have a $10,000 account. I'm risking 1%, and that's a 50-cent zone. So I can take 200 shares in this position to make this equivalent to $100. I hope that makes sense. So that's why I base my stops off technicals. I don't base my stops off anything else. I base my stops off, if this has failed, this idea I have didn't work because I expected this to hold, and that's what I base my idea off of. And if it didn't do what I expected, then I was wrong. And this is where I want to be told, yes, you were wrong, and you are now relieved of that position. Excellent. The range of my zones is really not that complex. So, like for instance here, I would have taken something like, I probably would have taken 944 down to 9, simply because, you can have 946 down to 878, but that's a much bigger zone. I would like to have my ads in a tighter area. That way I know that I can get a better cost basis. So it's just like, oh yeah, I can do this wick. I can do this wick. I can do, these two bodies are an area where, price was impacted twice. Maybe I can do that. But then I look at okay, well, do I realistically want to add an entire dollar's worth of position? No. So I find things that are more reasonable. And that's how I assess, how wide the zones are going to be. And then the stop is, what it is there. And then price targets I base off of this is a high rally, this is a high rally, this is a high rally. So I'll start scaling out in these levels. VWAP, you obviously also have to take into account, I need to, at VWAP, I know price is going to have some kind of reaction. So I need to decide whether or not I want to scale out, hold through it, add, blah, blah, blah. At the whole dollar and half dollar, I can assume that you're going to see some impact there as well. So those are all things you have to take into account. But having at the very core, being well organized enough to have a zone. I actually would have made my stop probably right here, just to give myself. I don't know. That's pretty tight. Maybe a little bit below that. 8.5. That's probably pretty good. So yeah, that's a 50-cent risk. I can take 200 shares to risk $100. Obviously you would tailor that formula to whatever your account size is. And then I would have my profit target at, maybe VWAP first, maybe the whole dollar first for a 50-cent move, and then maybe 10.5 for the next one, 11 for the next one. You can assess, but once you have all those things, it's very excellent because the 2-5-10 strategy almost has psychology already factored into it, right? It almost has the psychological element of trading already factored in, which is awesome because when I have these levels assessed and price comes down and it fills me, I say, okay, put my stop up exactly where I wanted it to be. It goes up and I sit here. And if it goes up to the area I had already defined earlier, I say, okay, sell. And if it doesn't, the computer stops me out. So there's no, as this is taking place, either stopping me out or going up where I will hit the sell button, there's nothing for me to think about or feel some type of way about. Again, I like to treat it like a video game. If I'm in a video game and I'm like, okay, I want let's assume it's like a tactics RPG. Yeah, I'm going to send my knight over to this square and I want him to attack that guy. Either that guy's going to dodge and stab me or I'm going to kill that guy. And then I'll do it. I'll watch it happen. And it does it. Something happens at that point, right? And then I assess what happened. And then I move forward. At no point in there, while playing a game that's completely automated, and once I'm in the move, once I've moved my character and decided what his action will be, hence, entering a trade and deciding where my stop loss and profit target are going to be, I don't sit there and go, oh my God, I'm so nervous. My guy is walking over there. What's going to happen? And a lot of that is because there's no real consequence to having something poorly happen in a video game. You start over, right? And it's important to have that same feeling, even though, we are risking our money, we are risking capital and things like that. But trusting your system and your risk management enough to know that, you benefit more often than you fail, and treating it, again, just like that video game. Once you get to the point where you can trade without going, oh no, my guy's walking over there, what's going to happen? And you just think okay, I've inputted my commands. Now let us see what the result is. Once you can treat it like that, it changes everything. It changes everything for you. It really does. Sorry, I got super nerdy in my review today. And this was a very short day of trading, and I made my review significantly longer than it needed to be. But alas, here we are. As always, DMs are always open. Questions are always welcome. Hit me up, guys. I hope you have a great rest of your day, and I will see you again tomorrow for the last trading day of the week. Be well, everybody.